Good day, folks. It's that time of year again. The flowers are blooming, the birds are chirping, and the taxman is rubbing his hands together. But fear not, my financially savvy friends. BaronTax is here to guide you through the ever-changing world of Australian taxes. We know that navigating the tax system can feel like trekking through the outback without a map, or a hat for that matter. That's why we've put together this jam-packed newsletter bursting with tips, tricks and plain English explanations to help you keep more of your hard-earned cash. This month we're diving into the most common queries this season. From superannuation strategies for those entering the golden years to choosing the right business structure for your entrepreneurial dreams, we've got you covered. So grab a cuppa, settle in, and let's dive into the wonderful world of tax. Worried you've missed the boat on boosting your super? Don't fret. It's never too late to give your retirement savings a well-deserved kick in the pants. Even if you're nearing retirement age, there are still ways to pump up your super and enjoy those golden years in style. Think comfortable cruises, spoiling the grandkids rotten, or finally getting around to writing that novel. There are a few different ways you can contribute to your super later in life. You can make personal contributions, receive contributions from your spouse, or even take advantage of government co-contribution schemes if you're eligible. Just remember, there are limits on how much you can contribute each year. So it's always best to chat with a financial advisor to work out the best strategy for your individual circumstances. So, discover how you can still make the most of your tax opportunities. So you're ready to take the plunge and turn your side hustle into a full-time gig? That's an exciting step, and it's one that many dream of but few actually take. It's a journey filled with potential and promise, but also one that requires careful planning and consideration. Congratulations. Now comes the slightly less exciting part, choosing the right business structure. This decision is foundational and can significantly impact your business's future. It's not just about the here and now, but about setting up a framework that will support your growth and ambitions. Don't worry, it doesn't have to be as daunting as it sounds. With the right information and guidance, you can navigate this process smoothly. Think of it as laying the groundwork for your business's success. The key is to find a structure that suits your business needs and your personal circumstances. This means considering factors like liability, taxation, and the level of control you wish to maintain. It's about aligning your business structure with your vision and goals. Are you a one-person show? Then a sole trader structure might be right up your alley. This is the simplest and most straightforward option, ideal for those who want to maintain full control and keep things uncomplicated. Looking to team up with a mate? A partnership could be the way to go. This allows you to share responsibilities, pool resources, and benefit from each other's strengths. It's a great way to combine forces and tackle challenges together. Or maybe you're dreaming big and envisioning a global empire. In that case, a company structure might be the best fit. This option provides a more formal framework, offering benefits like limited liability and the ability to raise capital through investors. Each structure comes with its own set of advantages and disadvantages, particularly when it comes to tax implications. For instance, sole traders might face higher personal tax rates, while companies can benefit from corporate tax rates but face more regulatory requirements. So it's crucial to do your research and seek professional advice to make sure you're making the smartest choice for your business. Consulting with a business advisor or accountant can provide valuable insights and help you understand the long-term implications of your decision. Remember, the right structure can set the stage for your business's success, so take the time to choose wisely. Additionally, consider attending workshops or seminars on business planning and structure. These can offer practical tips and real-world examples that can help you make an informed decision. Networking with other entrepreneurs can also provide perspectives and advice that you might not have considered. Ultimately, the goal is to create a solid foundation that will support your business as it grows and evolves. Whether you're starting small or aiming for the stars, the right business structure is a crucial step in your entrepreneurial journey. So take your time, gather all the information you need, and make a choice that aligns with your vision for the future. Remember, this is your venture, your dream. The structure you choose should empower you to achieve your goals and navigate the challenges ahead. With the right foundation, you'll be well on your way to building a successful and sustainable business. Section 4, selling your home suite and sometimes rental home. Ah, the family home. It's a place filled with laughter, love, and countless memories. From the first steps of your children to the many family gatherings, every corner of the house holds a special moment. It's where memories are made, sausages are burnt on the barbie, and sometimes rental income is earned. Perhaps you've rented out a room or the entire house at some point, turning your home into a source of extra income. But what happens when it's time to sell a property that's been both a home and an investment? The decision to sell can be emotional and financially complex. Well, things can get a little tricky on the tax front. Selling a property that has served dual purposes means navigating through a maze of tax implications. When you sell a property that's been partially rented out, you'll likely be hit with capital gains tax, or CGT, on the portion of the profit that's attributed to the rental activity. This means that the profit you make from the sale will be divided into two parts: the portion that was your home and the portion that was rented out. The good news is there are ways to minimize your CGT liability. By understanding the rules and planning ahead, you can reduce the amount of tax you owe. One strategy is to move back into the property and make it your primary residence for a period before selling. This can help you qualify for the main residence exemption, which can significantly reduce the amount of capital gain that's subject to tax. However, the length of time you need to live in the property to qualify for this exemption can vary, so it's important to understand the specific requirements. Of course, every situation is different, and the rules around CGT can be complex. Factors such as how long the property was rented out, the proportion of the property that was rented, and any improvements made to the property can all affect your tax liability. So it's always best to seek professional advice before putting your property on the market. A financial advisor or tax professional can help you navigate the complexities and ensure you're making the best decision for your financial situation. They can provide personalized advice based on your unique circumstances, helping you to maximize your profit and minimize your tax liability. Selling a home that holds so many memories can be a bittersweet experience. It's not just about the financial aspects, but also about letting go of a place that has been a significant part of your life. Taking the time to understand the process and seeking the right advice can make the transition smoother and more rewarding. In the end, selling your home suite, and sometimes rental home, is a significant step. With careful planning and the right guidance, you can navigate the complexities and move forward to your next chapter with confidence and peace of mind. Section 5, SMSFs, DIY super, or a recipe for disaster. Weigh the pros and cons of managing your own superannuation, self-managed super funds, or SMSFs. These are essentially do-it-yourself superannuation funds where you as the trustee have complete control over how your retirement savings are invested. They sound pretty fancy, right? The idea of managing your own super can be quite appealing, especially if you have a knack for financial matters, like something only high-flying CEOs and property tycoons dabble in. You might imagine it's a playground for the wealthy and financially astute, but the truth is, SMSFs are becoming increasingly popular with everyday Aussies. The appeal is understandable. With an SMSF, you can tailor your investment strategy to suit your personal circumstances and goals. After all, who wouldn't love to be in the driver's seat when it comes to their retirement savings? The autonomy and flexibility can be incredibly empowering, but before you jump in head first, it's important to understand both the perks and the pitfalls of going down the SMSF route. It's not all smooth sailing. On the plus side, SMSFs give you greater control over your investments. You can choose where to invest your money, whether it's in shares, property, or other assets, and can offer tax benefits in certain situations. For instance, you might be able to reduce your tax liability through strategic investment choices. However, they also come with a hefty dose of responsibility. Managing an SMSF is not a set-and-forget arrangement. It requires ongoing attention and diligence. You'll need to be across all the compliance requirements, keep meticulous records, and ensure that your fund is being managed in accordance with the law, and make sure you're meeting your trustee obligations. This includes everything from lodging annual returns to ensuring your investment strategy is up to date. If you're not financially savvy or don't have the time to dedicate to managing your own super, an SMSF could quickly turn into a recipe for disaster. The complexities can be overwhelming. The administrative burden alone can be daunting. From keeping track of contributions and withdrawals to ensuring compliance with ever-changing regulations. It's a lot to handle. In that case, you might be better off sticking with a traditional super fund. These funds are managed by professionals who have the expertise and resources to handle the complexities of superannuation, and leaving the investing to the experts. They can provide you with peace of mind, knowing that your retirement savings are in capable hands. So, while the idea of an SMSF might be tempting, it's crucial to weigh the pros and cons carefully before making a decision. Consider seeking advice from a financial advisor to determine if an SMSF is the right choice for you. They can help you understand the responsibilities involved and whether you have the capacity to manage them effectively. Educate yourself thoroughly about the ins and outs of SMSFs. The more informed you are, the better equipped you'll be to make a decision that aligns with your financial goals and lifestyle. Remember, the goal is to secure a comfortable retirement. Whether you choose an SMSF or a traditional super fund, the most important thing is to make a choice that supports your long-term financial well-being. So, DIY super or a recipe for disaster? The answer depends on your individual circumstances, knowledge and commitment. Weigh the pros and cons carefully and you'll be on the right path to a secure and prosperous retirement. Avoiding the ATO's radar. Learn how to stay compliant and avoid unnecessary scrutiny. Failing to declare income or lodge your tax returns is not just risky, it's downright dangerous. The ATO is armed with some serious technology, data matching programs that pull in information from banks, insurance companies, and even real estate transactions. Trust me, they find you. Now, if you get caught omitting income or failing to lodge a return, you're facing penalties, and they're far from light. If you challenge an ATO assessment, the burden of proof is on you to show that their numbers are wrong. And if you don't have all the right records in order, well, good luck with that. So, moral of the story, don't try to beat the system. If you think you've forgotten something or made a mistake, give us a call before the ATO does. Remember, Big Brother ATO is watching. But don't worry, we've got your back. Stay compliant, stay informed, and most importantly, stay stress-free. With the right guidance and timely actions, you can navigate tax season like a pro. Until next time, take care and happy filing. Thank you for joining us. We hope you found our tips and insights helpful as you navigate the complexities of tax season. Remember, staying compliant and informed is key to a stress-free experience. If you have any questions or need further assistance, don't hesitate to reach out to us. Visit BaronTax.online for more information and resources tailored to your needs. See you next time.